President Trump dropped a bombshell on the global auto industry, slapping a hefty 25% tariff on all imported cars and car parts. This move, effective April 3, 2025, sent shockwaves through the industry and beyond. Trump claims this aggressive action will revitalize American auto manufacturing and bring back jobs. However, critics argue it will ignite a trade war with devastating consequences for consumers and the economy at large. The tariffs target foreign-made cars and light trucks, adding another layer to existing duties. Parts imported for car manufacturing will also be subject to the 25% levy starting May 3, 2025. This sweeping measure exempts only parts from Canada and Mexico that comply with the USMCA trade agreement, at least until a more targeted system is implemented. The announcement sent a clear signal. Trump is doubling down on his America First trade policy, even if it means disrupting global supply chains and alienating allies. This decision is likely to have far-reaching implications, impacting not just the auto industry but the broader global trade landscape. The question on everyone's mind is, will this gamble pay off for Trump, or will it backfire, leaving American consumers and businesses caught in the crossfire? The financial world reacted to Trump's tariff announcement with predictable alarm. Stock futures tumbled, and automakers saw their shares plunge in after-hours trading. General Motors took a significant hit, with its stock plummeting nearly 7%. Ford and Stellantis were also caught in the downdraft, experiencing declines of over 4%. Even Tesla, often immune to market fluctuations affecting traditional automakers, saw its stock value decrease by 1%. The ripple effect extended beyond American borders, impacting car manufacturers globally. Toyota, Honda, and Nissan, all major players in the global auto market, faced significant share declines in Asian markets. The market reaction reflects the deep uncertainty and fear surrounding Trump's trade policies. Investors are wary of the potential for a trade war, which could destabilize markets and harm global economic growth. The uncertainty is compounded by the lack of clarity regarding the duration and potential expansion of these tariffs. The coming days and weeks will be crucial in determining the market's long-term response to this development. Will this be a short-term blip, or will it trigger a prolonged period of volatility and decline? The most immediate and tangible impact of Trump's tariffs will be felt by American consumers. The price of new cars is expected to skyrocket, potentially adding thousands of dollars to the sticker price. Experts estimate that consumers could see increases ranging from $5,000 to $10,000 per vehicle. This price hike will make new cars less affordable for millions of Americans, potentially pushing them towards the used car market or delaying purchases altogether. This decreased demand could have a ripple effect throughout the economy, impacting everything from auto loans to car insurance. The tariffs are also expected to significantly impact the cost of producing cars in the U.S., with estimates suggesting an increase of $3,500 to $12,000 per vehicle. This added burden will likely be passed down to consumers in the form of even higher prices. The impact on American wallets is undeniable and potentially devastating. The question remains, will the purported benefits of these tariffs, such as increased domestic production and job creation, outweigh the significant costs borne by American consumers? Section 4. The global assembly line under threat. Trump's tariffs threaten to unravel the intricate web of global supply chains that define the modern auto industry. The U.S. auto industry, despite Trump's claims, relies heavily on imported parts, particularly from Canada and Mexico. These parts are integral to the production process, and their increased cost due to tariffs will have a cascading effect on the entire industry. This dependence on foreign parts underscores a crucial reality. There is no such thing as a truly American-made car in today's globalized economy. The tariffs could force U.S. automakers to make difficult choices, such as shifting production overseas or absorbing the increased costs, potentially impacting their profitability. This disruption could also lead to production slowdowns and potential job losses, ironically undermining the very goal Trump aims to achieve. The interconnected nature of the global auto industry means that the impact of these tariffs will be felt far beyond American borders. The disruption to supply chains and the potential for retaliatory measures from other countries threaten to destabilize the entire industry. Section 5. Retaliation on the horizon. The international community has met Trump's tariff announcement with swift condemnation and threats of retaliation. Canada, a close trading partner and a vital link in the North American auto industry, views the tariffs as a direct attack. Prime Minister Mark Carney expressed grave concerns about the potential devastation to Canada's auto industry, which employs 125,000 people and relies heavily on exports to the US. Mexico, another critical player in the North American auto market, is also poised to feel the sting of these tariffs. The automotive sector accounts for a significant portion of Mexico's GDP and employs millions of workers. Retaliatory measures from Mexico could further escalate tensions and disrupt trade flows. The European Union, a major exporter of cars and car parts to the US, has also voiced its strong opposition to the tariffs. Germany, a powerhouse in the global auto industry, stands to be significantly impacted, and retaliatory measures from the EU could target key American industries. Japan, another major player in the global auto market, has expressed its deep concern and hinted at retaliatory actions. The potential for a tit-for-tat trade war looms large, with countries around the world preparing to defend their interests.